Sure. Okay. Hi, good morning, everyone. I hope you had a nice sleep and now fresh for the lecture. Uh, okay, I wouldn't be able to see the number of participants here. Okay. So, quick introduction. So, my name is Abhinay Gupta, and uh, I have worked on Ind AS transitions and implementations on various listed, non-listed companies during my, uh, last 5 to 6 years experience. Whenever Ind AS has first arrived in India in 2017, since then I have been, working specifically for Ind AS implementations. Today, I would be, discussing the standard Ind AS 20, accounting for government grants and government assistance. Although this standard is, you know, not very long standard. It is a short and crisp standard, but it is one of the most important standards from both perspectives, practical life perspective, as well as for your CA final examination perspective. So I hope you will enjoy the session. So you must have, studied corresponding accounting standard as well in your IGAP study material. So this standard is bit different on certain aspects from that standard, that all the key differences we will also cover at the end of the session. But quickly, let's start with the scope. What is covered, what is not covered in this standard. So as you can see on my screen, this standard is applicable for two things. Number one is accounting, and number two is disclosures, right? So these are the two aspects which are covered by the standard pertaining to any sort of government grants. So whenever entity receives any government grants from any government, okay, so we will study the definition of government grant. We will study the definition of government as well going forward. But till the time, we just need to understand what is, covered in the standard. So first aspect is accounting. How the government grants, if any, received from any governments will be accounted for in my books. What would be the accounting? And number two aspect is what are the disclosures required by the standard around those government grants which have been accounted for in the books of accounts, or government assistance which are received from the government. Disclosures of other forms of government assistance. So there are two key terms in the standard defined. Number one is government grant. Number two is government assistance. Okay, so we will study the definition of both the key terms. Government grants, accounting as well as disclosure, both the aspects are covered. Government assistance, only disclosures are required because standard prohibits any accounting for any sort of government assistance in the books of accounts. So as such, three things are there: accounting plus disclosure of government grants and disclosures for government assistance. I hope this scope applicability is clear to everybody, right? Now, there are certain exclusions by the standard. Number one, accounting for government grants if entity prepares financial information that reflects effects of changing prices. So you might have had a lecture around Ind AS 29 hyperinflationary economies, reporting. So under that standard, prices are changing. So we need to account or prepare the financial statements in accordance with that standard. So in those scenarios, this standard wouldn't be applicable. Okay. For changing prices regime. Now, second is government assistance in the form of benefits that are available in determining taxable profit or tax loss. For example, income tax holidays. So income tax holidays basically are, governed by the Income Tax Act 1962 under Section 80IA, 80IB, or under some other sections as well, right? So those benefits or, uh, sort of advantages are given to the organizations fulfilling the underlying conditions prescribed under those standards, right? So that is not to be treated as a government grant, because government is not giving as such any grant to a particular entity. It is, coming to you because you have fulfilled certain conditions under the Income Tax Act. So you are eligible for claiming those relaxations, exemptions from the Income Tax Act. So exemptions or relaxations from any sort of income tax under any of the Income Tax Act or sections are not covered by the standard, right? So those are not government grants. Similarly, investment tax credits, accelerated depreciation under Section 35 of the Income Tax Act. So if you are eligible for claiming accelerated depreciation, so again, that is not to be treated as a government grant. So this is expressly excluded by the standard to avoid any sort of confusion to any of the party, right? And any allowances or reduced income tax rates. So for example, in 2019, somewhere, finance minister had announced that income tax rates are reduced for the corporate houses from 30% to 25% or 22%, subject to, certain criteria. So whichever companies are eligible for those tax rates, they are claiming the reduced income tax rates. So that is again not to be treated as a government grant, right? Let me quickly see if there are any questions. So somebody has asked in the chat box meaning of accelerated depreciation. So I have already mentioned under Income Tax Act, under Section 35, there are provisions for claiming accelerated depreciations. For example, normally if on any asset depreciation rate under the Income Tax Act, it's say 10%, but it gives you that you can claim, accelerated depreciation or additional depreciation. So those aspects are not covered by the standard. Those are not to be treated as government grants for the purpose of this standard, right? I hope the point is clear. So I will come to the point, what is the difference between government grant and government assistance? But as of now, the objective is to understand what is covered, what is not covered, right? So the third point is government participation in the ownership of the entity. Now, sometimes, government invest in the equity shares of a particular entity. For example, recent example could be here for Vodafone Idea Limited, where government of India, has taken the almost 33% ownership of the entity, right? By converting the dues to the government into the equity shares, right? So that is again not to be treated as a government grant, because government is not giving as such any grant to the company. Rather, government is investing in the equity shares of that entity, right? So that is an investment decision made by the government, not the grant given by the government, right? Fourth point is government grants covered by India's 41 agriculture. Now, what happens under India's 41 agriculture? I'm not sure if you have already studied it. If you have not yet studied, let me give a quick background. So there is a specific standard which talks about how the biological assets will be accounted for the entities, having venture into agriculture activities or allied activities, right? So India's 41 talks about the accounting for those activities and underlying assets, right? Now, under that standard, if government gives any standard grant for any of the agriculture activities, right, then that grant is specifically covered by that standard itself. That is India's 41. So India's 41 covers both the aspects. First is the accounting for agriculture activities as well as the grants, if any, received from any government for those carrying out for those agriculture activities. So since India's 41 is a specific standard for agriculture activities and also covers the corresponding government grants received for those purposes, so that is here excluded from this standard, because this is a general standard for all sorts of government grants, and India's 41 covers those government grants which are for agriculture activities. So that is covered there. So hence excluded from here. So India's 20 will not apply to those government grants which are received from any government to the entity for carrying out any sort of agriculture activities, right? In detail, you will definitely study under India's 41. So for our purpose, this is excluded item from the scope of this standard. Any doubts, queries, questions on any of the point pertaining to the scope and the exclusions to the scope? Okay. Shall I proceed then? Now, let's understand the definition of government first. What do you mean by government? Government refers to government or government agencies and similar bodies, whether local, national, or international. It means central government. Covered? Yes or no? Yes. State government. Covered? Yes or no? Yes. Or any other local government of a particular state which reports to the state government, that government is also covered. If they are giving any sort of grants to any entities, those grants will be covered by the standard. So any government, it has to be government, right? Again, other government agencies which are nothing different from the government but are acting according to the instructions given by the government, right? Or other similar bodies which are also, part of government. So all these would be covered in the definition of government. So whenever any sort of benefit is received from any such party to the entity, and if that party qualifies the definition to be a government or a representative of a government, so it is an agency or similar other body which is a representative of government, like for example, Reserve Bank of India, RBI, right? So those entities, although they are separate legal entities, okay, they are not in true sense the government, but they are acting completely in accordance with the guidelines and instructions given by the government. So they are part and parcel of the government only for this purpose, right? Okay, so that standard uses the word international. So it means if the government pertaining to any other country, or say US government, UK government, or any other country's government gives any sort of grant to any of the entity working and operating here in India, then whether that grant will also be covered? Yes, that grant will also be covered. So irrespective of the fact whether the government is a central government, state government, or local government, or any sort of government agencies or similar bodies, or if it is an international government. So all these parties are covered well within the definition of government. Any question on this? Okay. Now let's understand the definition of government grants. Thereafter, we will cover the definition of government assistance so that we will be able to make out the difference between the two. Government grants are assistance given by the government in the form of transfer of resources. Right? So this is the keyword in the definition. Transfer of resources to an entity in return for past or future compliance with certain conditions relating to the operating activities of the entity. So there are certain transfer of economic benefits or economic resources, right? So if there is a transfer of resources from the government to the entity, then it will be covered under the definition of government grant. But if it is not the transfer of any resources as such, then that will not be treated as a government grant. Okay. Now, whenever government gives any sort of grant to any entity, there might be two situations. Either they are conditional, that is, there are prescribed certain conditions which needs to be complied by that entity, either before receiving the grant or after receiving the grant, as the case may be, or there might not be any such conditions, right? So grant can be conditional as well as unconditional. So if grant is conditional, then those conditions needs to be checked, which all conditions entity is required to comply with, and what is the timing of those conditions, whether they needs to be complied before receiving any such grants, or during the period after receiving the such grants, or within a minimum prescribed period after receiving the grant. So that might vary case to case, but there are both the possibilities. Grant may be conditional, grant may be without any conditions, right? They exclude those forms of government assistance which cannot reasonably have a value placed upon them. For example, free technical or marketing advice. Now, sometimes government, gives any sort of consultancy or free technical advice or, marketing advice, something which is not, transfer of economic resources, right? So this is a free advice which is available to all the entities, operating in that industry. So any industry can take the benefit of those, advisory or, technical guidance or whatever sort of consultancy which is available from the government side, right? So those are to be excluded from the scope of the government grant or from the definition of the government grant, right? Because there is as such no transfer of resources. So the focus should be on the word transfer of resources. So unless and until this condition is met, nothing will be treated as a government grant. And transactions with government which cannot be distinguished from the normal trading transactions of the entity. For example, favor to the entity by government procurement policy. Now, if government is, purchasing any sort of goods or services from any organization, right? So that cannot be regarded as a government grant because that is a normal part and parcel of the government procurement policy or purchase policy, right? So very quick example, for example, government, wants to buy, say, ACs. So now they want to buy, say, Havells brand ACs. So they approached to the Havells company and ordered 1,000 ACs, right, for their government offices. Now, this purchase of 1,000 ACs to the Havells cannot be treated or regarded as a government grant because that is a normal trading transaction by the government for that entity. Although such a big order from the government to any entity might help in tremendously for that organization to reap the benefits from such a large order. It might impact their profitability a lot, but still that cannot be treated or regarded as a grant received from the government. As such, government is not giving any grant or transferring any resources, right? They are simply ordering and purchasing the goods. The company is, into the business of that product. Also called by the names subsidy, subventions, or premiums. So sometimes, we can see that there is a government subsidy received, there is a government subvention scheme, or any sort of premiums government has granted. So all these words are to be used interchangeably for the purpose of this standard. So government grants, government subsidy, government subventions, or any sort of other words if used. The key word here to focus upon is transfer of resources. If there is a transfer of resources, then it will be treated as a government grant. Otherwise, it will not be treated as a government grant, right? Now, transfer of resources doesn't necessarily to be in money only. So this might be in the form of cash payments. This might be in the form of, transfer of resources in kind. For example, land. If government has, granted land, say free of cost, or at very cheap prices, nominal value to any of the entity, right? So that will also be treated as a government grant, right? Any questions? Local authority, municipalities included in the definition. Correct. So if there is any authority which is a representative of the government and giving or transferring any resources for any purpose with due approvals, that will be treated as a government grant. Okay. Let's see what is the definition of government assistance then. Government assistance is action by the government designed to provide an economic benefit, right, specific to the entity or a group or range of entities qualifying under certain criteria. For example, priority bidding quota for MSMED companies. So you must have heard that government frames, policies around MSME so that they can lift the small and medium enterprises as well. They can do business, they can survive among the group dominated by the larger companies. So they sometimes frame such policies which is, advantageous to certain small size and medium sized companies for some purposes, right? So they are getting an edge over the large companies, right? So that kind of priority bidding quotas, policies, when framed and announced by the government, is not to be treated as a government grant, but rather it would be treated as a government assistance only, right? So because by announcing such policies or framing such policies for the benefit of a particular pool of companies, right, that cannot be said that government is transferring as such any resources to those entities, right? It is a matter of fact that government is giving them a advantageous, conditions under which they can also nurture their business and, grow, right? So that is to be treated as a government assistance only. It cannot be treated as a government grant because there is no transfer of resources, but certainly there might be certain economic benefits which will flow to those entities because they are getting an edge in, participating in any bidding over the larger companies. So if they win those contracts, they will be getting economically benefited, right? So economic benefit will be there, but there will not be as such any transfer of resources from the government side. So that is the key difference between the two definitions. So government grant is clear transfer of resources. giving cash, giving any assets, giving land, or giving any other intangible assets, say any specific permits to a particular entity, right? So that will be regarded as a government grant. But if there is no transfer of resources, it is a economic benefit only, and that is again not to a particular or specific entity, for a range of entities, because that quota policy is applicable for almost all the MSME companies. It's not specific to one company among the 100 MSME companies, right? So that will be treated as a government assistance. Now, standard says for government grants, accounting and disclosure both are required. For government assistance, there wouldn't be required any accounting of that, right? Only disclosures are required that entity has benefited from these government assistances during the financial year, right? Government assistance for the purpose of this standard does not include benefits provided only indirectly through action affecting general trading conditions, such as provision of infrastructure in development areas or imposition of trading constraints on the competitors. So if there are any, general infrastructure development, for example, railway sidings have been approved for a particular area, or fast track railway lines, have been laid down, or some other roads or highways, or, are announced, or, in the process or constructed in a particular state, region, or locality, which will be benefited, which will be giving benefit to the entities operating in that region, state, or area, right? So that is a general development carried out by the government. That is not to be treated as a government assistance by the government for to those entities, right? This is a general development which government is actually responsible for to do, right? So that is not to be treated as a government assistance, because this is not giving as such any direct economic benefits to those entities, like in our previous example, priority bidding quota for certain class of companies, for example, medium and small enterprises, right? Similarly, if government imposes any sort of constraints or restrictions on certain competitors under the Monopolies Act, right? So those are not to be treated as any sort government assistance to the entities who will be benefiting from those, laws or amendments made or announcements made, right? For example, if China, is supplying a particular product or commodity at a cheaper rates, now Indian manufacturers are, not able to match the cost, right? So to give the advantage to Indian manufacturers, if government has introduced additional duties on those commodities import, then it wouldn't be regarded as a government assistance. It is a general act of the government in the interest of the country, right? So that cannot be regarded as a government assistance. I hope the definition of government grant and government assistance is clear. If there is any query, question, you can please ping in the chat box. I am happy to take it up and answer. So Shruti is asking, if normal trading activities are excluded from definition, then why operating activities word is mentioned in the definition? Okay. So the question here is, here we have used the word operating activities, and we are saying if government is giving any benefit which is part and parcel of normal general trading conditions, then that is not to be treated as even government assistance. So the difference here is government grants are given for the purpose of operating activities of the entity. Operating activities means the business in which the company is operating, right? For that business, some grant is being given. For example, a company is setting up a factory, right? For producing, say, a particular commodity, say mobile phones in India. Now, government thinks because, there are very few manufacturers in India and it would be helpful if, people come and join hands and set up factories. So there are dual advantages. Number one, the country will become independent and from the import of mobile phones, which is massively done at present from China. Another is there would be, employment generation. So government thinks whoever comes to, set up the factory for manufacturing mobile phones, okay, we are happy to announce 50% of the factory cost to be reimbursed to them once the factory is set up, right? So this is a government grant because government has agreed to reimburse, say, 50% of the factory cost once the factory is set up and ready for use. Now, if any entrepreneur comes in and set up that factory, incurred 100 crores and gets the reimbursement of 50 crores from the government, then that 50 crore is a transfer of resources from the government that will be covered as in the definition of government grants. And because it is pertaining to the operating activities of the entity. So that is why this is the nexus between the operating activities and transfer of resources in the definition of government grant. Now, coming to your point, in the definition of government assistance, one of the example, we said that general trading conditions are not to be, regarded. So general trading conditions means when government is giving any, passing any, notification or announcing anything which is favorable to the general public, and that might have an effect on general trading conditions. For example, improvement of infrastructure in that area. Earlier, because there were no roads constructed nearby, so company was spending more on the transportation cost because they might have incurred additional transportation cost because lack of the infrastructure. But now the roads are constructed, so transportation has become smooth. So that is resulting in the savings of the fuel cost or the diesel cost for the company. So that cannot be regarded as a government grant. Even that cannot be regarded as a government assistance because whatever the government has done in this case is a general development of the infrastructure in the country, right? So that is not a benefit or assistance given to a particular entity. Getting my point? So Kushuma is asking for benefit government will say conditions or not. So as I previously mentioned, government grants may come with certain conditions. Government grants may come without any conditions. So both possibilities are there. If there are conditions, those conditions needs to be complied in order to claim those government grants. If there are no conditions, then definitely nothing needs to be complied. It's just a matter of fact that government is giving you some benefits for your any of the past actions, right? Okay. So these are a few examples given in your study material. Let's quickly have a look. Free technical assistance or marketing advice and the provision of guarantees are forms of government assistance to which no value could reasonably assign, right? That I have already discussed previously. An example of transactions with the government which cannot be distinguished from the normal trading transactions of the entity is a government procurement policy that is responsible for a portion of the entity's sales. Like I have taken an example of Havels, where the government has given an order for 1,000 ACs purchase, right? The existence of the benefit might be unquestioned, but any attempt to segregate the trading activities from government assistance could well be arbitrary. So what here the interpretation is, if there are any orders received from the government for any of the products which entity is in the business for, then those orders cannot be regarded as government grant or government assistance because that is a normal part and parcel of government procurement policy, because government needs to buy those goods. If they do not buy from you, they will buy from somebody else. It's a matter of fact they are giving an order to you because your products might be a good quality over your competitors or other enterprises, right? Assistance in the form of priority bidding status. The government specifies that entities below certain size, for example, below 500 market cap, below 100 market cap, 100 crore market cap, below 500 crore market cap, or uh, some other parameters on which on the basis of which size can be determined. For example, sales of the previous audited period, or profit or loss for the previous periods. So any sort of parameters can be given. Priority in bidding for a particular type of government contract by mandating a minimum number of such entities to obtain bidding status. For example, there is a Pune Mumbai highway order is to be given, and what happens? There are larger entities like Larsen and Toubro, Reliance Infrastructure, other large entities as well participating in those quotas, and there are smaller entities as well which are participating to get that contract, right? So what government generally does in practical life, they ensure that certain minimum number of small companies as well given the opportunity to participate and get the orders. So they might give certain patches of the highway. Say for example, 10 kilometers patch is given to a particular company, another 10-kilometer patch is given to another company, right? So they ensure that small and medium enterprises are also getting the part of the entire order. So if that is the intention, then it cannot be regarded as a government grant from the government side, but certainly it will fall within the definition of government assistance, right? Assistance in the form of credit facilities at market rates. Now, if government gives any loans or any credit facilities to any of the entities, right, at market rate of interest only. So either the entity could have obtained those credit facilities or loans from the banks, or they are getting the same loans or credit facilities from the government at the same market rates at which they could have obtained those from the banks. Then in that case, it cannot be regarded as a government grant, in spite of the fact government is transferring resources, because government is giving loans, but those loans are actually given at market rate only. So that cannot be regarded as a government grant. However, if those loans are given at a below market rate of interest, for example, market rate of interest applicable for the entity is say 10%, and government is giving the loan at 5% interest rate, then the delta of 5% would be treated as a government grant, and that needs to be accounted for in the books of accounts of the entity. We will cover a practical question around this concept. Okay. Before I proceed to the types of government grants, or basically the major categories defined by the standard, any doubts on the definition of government grant or government assistance, or you would like to ask anything on that? No questions? Okay. Now, standard defines government grants of two types, or I would say two categories. They are classified into. First is government grants related to the assets, and second is government grants related to the income. Okay, so there are two categories given by the standard to classify the government grants. Government grants related to the assets are the government grants whose primary condition is that an entity qualifying for the grant, qualifying for them, should purchase, okay, construct, or otherwise acquire a long-term asset. Subsidiary conditions may also be attached, restricting the type or location of the assets or the periods during which they are to be acquired or held, right? For example, government has, coming back to my previous example for the mobile phones manufacturer, government has announced that if somebody is setting up a factory for manufacturing mobile phones, say in the state of Andhra Pradesh or in a particular region, right? Now, the two objectives government has in mind. Number one is to make India, lead manufacturer for the mobile phones and exporter of the mobile phones going forward. And another is generation of employment within that state or, within that region. So these are the two objectives. There might be many more, but for the sake of simplicity, these are the two objectives government has announced. Now, few entrepreneurs have come up to, set up the factory or, purchase any existing factory set up by somebody else or acquire otherwise, for example, acquisition of any company who has been manufacturing the mobile phones, right? So they are eligible for claiming these grant because government has announced if somebody sets the factory up, then we will be bearing the 50% of the factory cost. Okay. So that 50% cost of the factory, subject to say maximum cap of 50 crores, for example, will be reimbursed to the person who complies with these conditions. Now, this is a government grant related to asset because here the grant is being given only if the factory is set up or long-term asset is acquired or constructed or purchased, right? So for that purpose, if the government grant is associated, then it will be regarded as a grant related to assets. Or say for any machineries or any sort of, other long-term assets, if any of the grants are being announced, then those grants will be regarded as a grants related to assets. Now, grants related to income are the government grants other than those related to the assets. So, whatever is the residual, which is not government grant related to asset, will be regarded as grant related to income. So, we need to just check basis on the terms and conditions given in the grant contract. If it is related to any long-term asset, which entity is expected to purchase, construct, or otherwise acquire. If that is not the case, then simply it will be regarded as a grants related to income, right? Shruti is asking, is government assistance a part of government grant? No, government assistance cannot be regarded as a part of government grant. So both are two different things. Government grant means transfer of resources. Government assistance means just a economic benefit which entity may arrive because of that assistance. But that is not the transfer of resources directly flowing from the government to the entity, right? Okay. Forgivable loans. So sometimes government gives a loan and there are certain conditions that if entity complies with those conditions, then those loans will not be repayable to the government, otherwise repayable, right? So there are certain conditions on if they are complied with, on that basis, government may waive the loan repayment. So those loans are called as forgivable loans, right? So forgivable loans are the loans which the lender undertakes to waive repayment of under certain prescribed conditions. So if certain prescribed conditions in the contract are complied with by the entity, then those loans will be waived. So those are called as forgivable loans. Once they are waived, they will be regarded as a government grant. Non-monetary government grants. A government grant that takes the form of a transfer of a non-monetary asset, right? So, such as land, because land is given by the government and it is the grant given in kind rather than in cash, right? So, this will be regarded as a non-cash government grants or non-monetary government grants, or for that matter, any other assets which or any other resources for which entity is benefited from the government, right? For example, government might send some, inventory to an organization or send some other consumables to the organization or any sort of assets right? So that would be regarded as grants in kind. And again, that is meeting the definition of transfer of resources. So again, that will be regarded as a government grant, although are in the nature of non-cash or non-monetary. Now, if the government gives any grants in kind, then those needs to be accounted for by the standard either at the fair value or at the nominal value. We will cover the accounting going forward. But if entity opts the fair value option to record these government grants received in kind, then how the fair value will be measured? So fair value will be measured in accordance with Ind AS 113. And 113 gives the definition of fair value, which is reproduced here for quick reference, is the price that would be received to sell an asset or paid to transfer a liability in an orderly transaction between the market participants at the measurement date, right? So this will be covered under Ind AS 113 whenever you have that lecture. But just for a quick reference here, if any government grant received by an entity in kind needs to be fair valued, then fair value has to be determined in accordance with Ind AS 113, right? That is the point which I want to clarify. So whatever we have discussed so far, let's do a quick catch up. So government support basically can be of three types. Number one, government grants, that is transfer of resources. Government assistance, that is economic benefit. For example, MSME quota, priority bidding quota, or certain other benefits which are indirectly provided. For example, general development of the area, building highways, roadways, railways, all that stuff which the government carries out as a part and parcel of their routine activities. So these other benefits are not to be treated neither as government grant nor as government assistance and are completely out of scope of this standard. Government assistance, no accounting, only disclosures, right? And here government grants, accounting as well as disclosures, right? And now government grant we have just studied can be of two types. Either it is related to asset or it is related to income. Asset means long-term assets, any sort of factory, plant and machinery, or any other long-term assets which are to be purchased, constructed, or otherwise acquired by the entity. Then those grants will be regarded as grants related to assets. If that condition is not there, then it will be regarded as grants related to income. So grants related income is a residual category of grants. So any grant which is not related to asset by default will become a grant related to income, right? So we will study the accounting as well as disclosure for both these categories of grants, right? And then disclosures for the government assistance, and here nothing is required, right? I hope overview of the standard is clear to you. Any questions or should I proceed? Okay. Now the next item is recognition of government grants. Only when there is a reasonable assurance that entity will comply with the conditions attached to the grant and grant will be received. Okay. So there are two conditions in order to recognize the government grant. Number one, if there are any conditions attached to the grant, entity believes that they will be able to comply those conditions if those needs to be complied in future periods, right? And if those needs to be complied before receiving the grant, then entity believes that yes, we are eligible and we will be able to comply. And another thing is grant will be actually received from the government to the entity. This is highly likely or more likely than not, right? So grant will be received, that is there, and entity will comply with the conditions, that is the assessment made by the entity. If both the conditions are met, then only I will recognize the government grant in my books of accounts. So if any of these criteria is not met or is not believed to be met by the entity, then grant recognition will be suspended till the time these criterias are met by the entity, right? So here the concept is accrual concept. Although I have not yet received the grant, although I have not yet met the conditions, but I can recognize the government grant in my books of accounts on the basis that I will comply with the conditions and the grant will be received. There is no doubt about that, right? So these are the two criteria I need to check first before I recognize. Government grants shall be recognized in profit and loss. Okay. So we cannot use OCI. We cannot use any other category sitting within the equity, right? So it has to be routed through P&L only, right? On a systematic basis over the periods in which the entity recognizes as expenses of the related cost for which the grants are intended to compensate. So matching principle. So what standard is saying that, boss, you recognize the grant when you believe that you will be able to meet the conditions laid down in that grant contract and you believe that grants will be received to you from the government. But whatever recognition has to be done has to be mandatorily done in the P&L only. We cannot use OCI for this purpose, number one. And grant has to be routed to P&L on a systematic basis over the years or periods for which the entity will recognize the corresponding expense to avail those grants, right? For example, if the entity is receiving the grant related to the asset, then asset construction has to be started or it has to be under process, and basis on that, conditions are expected to be met. Then once the asset is ready and it starts, its operations, then grant will be flowing into the P&L from the very same date when the asset is ready for use. And as the depreciation flows to the P&L, grant flows as income to the P&L. So matching principle. Depreciation is my expense for that asset and grant is the benefit received from the government for setting up that factory. So depreciation will be going on the debit side of the P&L and grant will be credited to the P&L in the same fashion or same manner. If the grant is not related to asset, it is related to income, but there are certain conditions that you need to do the society welfare in, say, next 5 years for this much amount, and then we will be giving you this grant. So you have to incur certain expenses as well. So as soon as you incur those expenses, the corresponding proportion of the grant will be received to you, or even if not received, expected to be received, will get a credit in your P&L, right? So in both the cases, we have to consider the matching principle for recognizing the grants in our accounting. So Shruti is asking why assistance is not accounted in the books. So government assistance is not accounted because that is prohibited by the standard expressly, right? The standard doesn't allow recognition of government assistance in the books of account. Hence, that is not recognized. This is the out of the scope from the recognition by the standard. Now, classification. We have already discussed that either it can be related to asset or it can be related to income, right? Now, grants related to asset presentation and accounting, either by setting up the grant as deferred income or by deducting the grant from the carrying amount of the asset. So there are two ways to present the grant in your balance sheet. Either you set it up as a deferred income on the liability side, it will be reflected in your balance sheet, or you can do a net presentation. That is, you have set up the mobile manufacturing factory of rupees 100 crore and 50 crore is the grant to be received from the government. So you will deduct the grant amount from the factory cost, that is 100 crore minus 50 crore, and you will present the factory cost PP&D at net 50 crore only in your balance sheet. So both the presentations are allowed by the standard. Either you can do the gross presentation, that is asset at full value and the grant as a deferred income at full value, or you can do a net presentation as well. So that is a free choice available to the entity. They can opt for. Grants related to income, either credit separately or under the general heading. For example, other income. So within the other income category, because this is not a revenue from operations, right? So any grant received from the government, which is not related to asset, it will be regarded as a related to income only. And hence it needs to be credited to the P&L, right? So in the P&L, where I will be presenting that, of course, I cannot present it under the revenue from operations because this is not my revenue, right? This is a grant. So this is a other income sort of, thing for me. So within the other income, I will classify it as grant for so and so purpose received from government. Okay. See note for the disclosure. And in the disclosure, I will explain all the aspects of the government grant, right? So under other income, I can present it, or else what other choice the standard is giving? Deduct in the related expense reporting in the P&L. So for example, if it is given to you for incurring some expense, then once you incur that expense, you are eligible to receive this grant. So what you can do, you can present that expense net of this grant. So if you have incurred 10 crores rupees of expense for XYZ purpose for which the grant was intended to be received, and you have received the, say, grant of rupees 3 crore, then 7 crore is the net expense you can present in your P&L. So both gross and net presentations are allowed by the standard for both the categories of the grants, whether it is related to asset or whether it is related to income. Is it clear? Okay. Now, a lot of theory we have, just discussed. It's the time to pick up a practical question so that we understand how it is going to be recorded. An entity opens a new factory and receives a government grant of 15,000 in respect of capital equipment costing rupees 1 lakh. Okay. So 1 lakh is the cost of capital equipment for which the government is announcing a grant of rupees 15,000 once that equipment is purchased by the entity. Entity depreciates all the plant and machinery at 20% per annum straight line basis. Show the statement of profit and loss and statement of financial position extracts in respect of the grant for the first year. So in the first year, what would be the presentation in your P&L and what would be the presentation in your balance sheet for this purchase of equipment as well as receipt of 15,000 grant for that equipment? Would you like to try this one? I can wait for 60 seconds so that you can think through what should be the presentation and accounting for this government grant. You can share your responses in the chat box so that I can see. Any luck? If somebody has tried it. So Munish is saying 15,000 will be treated as other income. Okay. Uh, Mohammed Abdul is saying entity can either A, reduce 15,000 from the property, plant and equipment, or B, what is the B? Okay. So let's see how the P&L and balance sheet will look like under both the options available. Both the options, when I say, I mean to say that first, the grant is related to asset or income. You tell me this answer at least first. If it is related to asset or it is related to income. So it is related to asset only, right? For the grants related to asset, there are two choices available in the standard. Number one, either I can set that grant up as a deferred income in my balance sheet and continue to present my machinery or the underlying asset at cost. Another option is I can set the grant as net from the cost of the asset and present the asset net in my balance sheet, right? So these are the two options given by the standard. So let's see what is the look like of the financials as well as the P&L under both the options. So option one, when grant is treated as deferred income. So a statement of profit and loss extract. So depreciation will be reflected at 20,000 because 1 lakh is the cost of the equipment and 5 years is the useful life and SLM is the method opted by the company. So 20,000 will be the depreciation for the year one and government grant credit. How much? 3,000. Working note number one. So let's see what is the working note number one. So here is the account of the government grant deferred income. Bank account debit to government grant received 15,000, right? So 15,000 is credited in my government grant ledger and 5 years is the period over which the equipment or underlying asset will be depreciated, and standard says that we have to apply the matching principle for credit of government grant into the P&L, right? So matching principle is 5 years. So in 5 years on SLM basis only, I will credit the grant. So 15,000 divided by 5. So 3,000 would be the amount which will be credited to the P&L in the year one as other income, right? And balance carried forward 12,000. So 12,000 will be the carry forward balance of the government grant, right? Now coming back to the solutions. So depreciation is 1 lakh divided by 5 and grant is 15,000 divided by 5 credit, right? Now statement of financial position extract. Non-current assets, property, plant and equipment at 1 lakh less accumulated depreciation, that is year one depreciation of 20,000. So 80,000 will be the value of the property, plant and equipment in my balance sheet. Non-current liabilities, government grant 12,000 balance, that is minus 3,000 current liability. So 9,000 will be reflected as a non-current liability and current liability will be the government grant of 15,000 into my 20%, that is 3,000. Now, who will answer me why this 9,000 and 3,000? Why not here 12,000? Because only 3,000 has been credited to the P&L. So balancing figure of the government grant is 12,000. Then why I have segregated this 12,000 into 9,000 and 3,000 in my balance sheet? Anybody would like to answer this? Now, as we know, whenever we prepare the balance sheet, we need to segregate all assets and liabilities into the non-current assets and current assets, as well as non-current liabilities and current liabilities, right? Now, out of the remaining balance of 12,000, 3,000 is to be realized into the P&L in the next 12 months from my reporting date. That is the date of balance sheet I am preparing. So within next 12 months, 3,000 again will be credited to the P&L. So that is why that is regarded as a current portion of the government grant, right? And non-current portion will be the 9,000, which will be realized after 12 months from the reporting date, right? So this is how the P&L and the balance sheet would look like under option 1. Now let's see under option 2. Under option 2, what will happen? Statement of profit and loss extract. Depreciation 1 lakh minus 15,000 into my 20%, because I am here choosing the grant to be net from the cost of the asset. So 1 lakh minus 15,000, 85,000 into my 20%. 17,000 would be the depreciation which will be reflected in my P&L. And balance sheet extract, statement of financial position, non-current asset, property, plant and equipment, 85,000 less accumulated depreciation 17,000. So 68,000 will be the carrying amount of the property, plant and equipment. And there wouldn't be any grant in this case, because that I have already netted off from the asset. I hope accounting is clear under both the options for the assets related to grant. Clear? Any questions, queries, doubts here? $12,000 is used more than 1 year. Correct. Any questions? Okay. Other forms of government grant. Government loan at below market rate of interest is treated as a government grant. I have explained it before as well, that if the government is giving the loan at the market rate of interest, then it will not be government grant. But if it is giving the loan at below market rate of interest, then it will be treated as a government grant. Now, how the calculation and recognition of that grant portion will happen, we will see. The loan shall be recognized and measured in accordance with Ind AS 109. That is, as the difference between the initial carrying value of the loan determined in accordance with Ind AS 109 and the proceeds received and is accounted for in accordance with this standard. So we will do the practical on this to understand better. The entity consider the conditions and obligations that have been or must be met while identifying the cost for which the benefit of the loan is intended to compensate. So whenever there is any loan at below market rate of interest given by the government to any entity, in that case, what happens? There might be certain conditions, there might not be certain conditions. If there are conditions, those conditions also needs to be factored in and complied with in order to regard that loan as a government grant, right? A forgivable loan from the government is treated as a government grant when there is reasonable assurance that the entity will meet the terms of forgiveness or the waiver of the loan. Okay. So, uh, sorry for the inconvenience. Some Windows update, occurred, and that's why we announced the break. I hope you had a break now and everybody's back. So, what I was discussing is other forms of the government grant, right? We were here, we have just completed this practical, and I was just discussing these other forms of the government grant. So, government loan at below market rate of interest is to be treated as a government grant because there is a benefit to the organization of paying lesser interest as compared to what they would have been paying to the banks had they obtained the loan from the bank at the market rate of interest. So suppose if the entity can obtain a loan at a 10% and government is giving a loan at a 5% rate of interest, then remaining 5% which the entity is not expected to pay to the government would be regarded as a transfer of resources from the government to the entity, right? So that discounted rate of interest, would be regarded as a government grant, and we will calculate how much amount will be, there for that reduced rate of interest in accordance with Ind AS 109. So we will calculate the uh, grant amount in accordance with Ind AS 109 by comparing the amount actually received and, the liability which needs to be recorded against that loan. So the delta between the two would be regarded as a government grant. We will quickly cover this concept through a practical example. The entity shall also consider the conditions and the obligations that have been or must be met when identifying the cost for which the benefit of the loan is intended to compensate, right? So if there are any other conditions or obligations illustrated in the grant contract, those needs to be taken care and, assessed so that we can see how much benefit we will be, getting from the government, which is, and for what purpose is it is intended to compensate, right? Again, forgivable loan, as I had mentioned previously, if there is a loan given by the government with certain conditions, if those are met, the loan will be waived off. So if the entity believes that they will be able to meet the conditions, then in that case, this forgivable loan will be, regarded as a government grant only. And if the entity believes that they will not be able to comply with the conditions, then eventually they will end up repaying the forgivable loan to the government. In that case, it would be regarded as a government loan only. As such, other types of loans we generally do borrow from banks or financial institutions, right? So basically, the concept is if we are getting any resources or any sort of economic benefits in terms of transfer of resources from the government, that will be regarded as a government grant. Other forms of government grant, for example, a government grant that becomes receivable as a compensation for expenses or losses already incurred. So if any of the expenses the entity has already incurred in the past, or any losses the company has incurred in the past, or for the purpose of immediate financial support to the entity with no future related cost, shall be recognized in the P&L in the period in which the grants becomes receivable. So this grant is simply intended to compensate any of the past cost which the entity has already incurred, or for any loss suffered to the entity for any XYZ reason. So this grant will be related to income only, and will be recorded in the P&L as and when it becomes receivable, right? So if there are any formalities or modalities around there which the entity needs to fill, for example, they need to fill the application form, submit it to the government office along with the supporting of the expenses for which the grant is, claimed for. Then once those formalities, modalities are done, and if the assessment of the management of the entity is that there is no doubt about the receivability of the grant from the government, as everything has already been attached and it is highly likely that government grant will be received, in that case, this will be regarded as a grants related to income and will be directly credited to the P&L, right? Because there are no further conditions attached, so no further obligations on the entity. Hence, full amount of grant will be recorded in the P&L. Now, non-monetary government grants. So as we previously discussed, grants can be in money or grants can be in kind, right? So whenever grants are in monetary terms, so there is as such no difficulty in estimating the value of the grant. But whenever the grants are in the form of kind, for example, land is, given by the government or any other, assets are transferred by the government to the entity at free of cost or nominal value, then those will be regarded as a non-monetary government grants. So there are two options as we previously discussed. Either management can account for these non-monetary government grants at the fair value of those grants, or record both the asset and the grant at the nominal amount, right? So two choices I have. Either I determine the fair value of those non-monetary government grants. For example, if the entity has received a land, then land can be recorded at fair value or at nominal value, say rupees 1, okay, or rupees 100, as the case may be. Now, let's quickly understand how the below market rate of interest loans given by the government to the entity will actually be, calculated and accounted for. So this is the questions, practical question, which we'll be discussing. A limited received from a government a loan of rupees 50 lakhs, right? So this is the loan of rupees 50 lakhs received, on which 5% interest is payable, right? And repayable loan is after 5 years in a bulleted payment, right? So after 5 years, 50 lakh needs to be repaid, and for the 5 years, 5% interest is liable to be paid to the government on this loan. The prevailing market rate of interest is 12%. So if the entity borrows the similar loan from any other bank or financial institution, entity will be able to, get that loan at 12% rate of interest, right? So we can see that 7% rate of interest is the benefit being passed on by the government to the entity in the form of reduced interest payments. So reduced interest payments will be meeting the condition of transfer of economic resources, right? So government is passing on the benefit of 7% of interest to the entity, right? So this is a transfer of economic resources. Hence, it is meeting the definition of government grant, right? Now, the fair value of the loan is calculated at rupees 37,38,328 rupees at 12% interest rate, right? How should the government grant be measured in the following scenarios? Number one, the loan is an immediate relief measure to rescue the enterprise. So enterprise might have suffered any losses because of any natural calamities like earthquake or etc. And government just intends to revive the organization, because if the entity is not revived, this will impact the livelihood of the people residing in that locality, right? Because they are employed by this organization. So the objective of government reviving this organization is to ensure that people are not affected in that area, right? Who are employed by this enterprise. So government intends to give this loan or reduced cheaper loan basically to this enterprise for the rescue from the natural calamity. Number B scenario, the loan is a subsidy for staff training expenses incurred equally for a period of 4 years. Okay. So there are three scenarios, right? And we will discuss the accounting, how it will, be there for three scenarios. So scenario one is the loan is intended to, rescue the enterprise. The loan is intended to give a staff training, staff training expenses, which for next 4 years. And number three, the loan is intended to finance a depreciable asset. So, and government has asked the entity to, purchase a particular asset or depreciable asset, and for that asset, this loan, cheaper loan has been granted by the government, right? These are the three scenarios. So first of all, we will see the calculation. So opening value is 37 lakh 38,328 rupees, right? So this is the present value of all the future payments, right? So 12% is the market rate of interest and 5% is the rate of interest the entity is expected to pay to the government, right? So we will calculate how much interest would be there in year one at the rate of 12%. So this comes to 4,48,600 rupees, right? And how much the entity is expected to pay? Actually 5%, that is 2,50,000. 2,50,000, how it has been calculated? 50 lakhs into my 5%. So because the loan amount is 50 lakhs and 5% is the interest rate, so 2,50,000 would be the amount payable, right? So what would be the closing balance? So in year one, closing balance would be opening balance plus interest as per the Ind AS 109, that is in accordance with the EIR method, and minus the payments of interest already made by the entity or payment discharged by the entity during the year one. So this would be the closing balance. This will become the opening balance of the year two, and the calculation goes on. In the last year, fifth year, I will pay 2,50,000 as an interest plus 50 lakh as a repayment, right? And the liability will be settled. So there wouldn't be any closing balance after the end of the year 5, right? So what would be the journal entry in my books of accounts on day one? So on day one, what I am getting 50 lakh rupees, right? So I will debit my bank account by rupees 50 lakh rupees. And then I will credit my deferred income by the amount of grant, right? Which would be the balancing figure. And I will credit the loan liability in the name of the government, loan payable or repayable to the government by how much? 37,38,328. So this is the present value of 50 lakh at 12%, right? So this is the present value of 50 lakh at 12%, which is also given in the question as well. So this is my day one liability, right? So day one liability is this much. Day one proceeds, which I have received, is this much. So whatever is the delta will belong to the deferred income. That is the government grant, right? Now, we need to discuss the implications of this grant under three different scenarios given in the question, right? Number one, 12,061 and 672 is to be recognized in the P&L on a systematic basis, because the standard asks for matching principle on a systematic basis over the period in which A Limited recognizes the corresponding expenses against which this grant is expected or intended to be received, of the related cost for which the grant is intended to compensate, right? So scenario one, when the loan is an immediate relief measure to rescue the enterprise from a natural calamity, right? So in that case, what we will do, 12,61,672 will be recognized in the P&L immediately. Why immediately? Because there are no future conditions attached to it. There is nothing actionable on the part of the organization in order to claim this grant. Hence, whatever amount is expected to be received from the government is purely an income for the enterprise on the day one, because there is no obligation pending on organization to be fulfilled in future, right? So whatever is received or whatever is the amount of grant will be credited straight away to the P&L, because it pertains to the losses incurred by the enterprise because of natural calamity in the past, right? So those losses have already been incurred in the past. Hence, grant is, as a relief measure to that loss. So this will be a pure income. So this will be credited in other income, right? of the entity on the day one. Scenario 2, the loan is a subsidy for the staff training expenses incurred equally over next 4 years, right? So in that case, what we will do, this grant amount, 12,61,672, will be recognized in the P&L over the period of 4 years on SLM basis, because I will be incurring the cost for staff training, the purpose for which this grant has been given by the government. So I will be crediting this grant over the same period, right? So I will be incurring expenses for next 4 years, and I will be receiving the benefit of the government grant for incurring that expenses over the next 4 years. So this grant will be recognized equally for next 4 years in my P&L as other income. Scenario 3, the loan is to finance a depreciable asset. Now, the condition attached to the loan is that company needs to buy, construct, or otherwise acquire a particular, long-term asset, right? Any machinery or building or land, whatever, or factory, right? So for that very purpose, this grant is given. Now, in this case, the grant is grant related to asset, right? Under previous two cases, scenarios A and B, grant was grant related to income because there was no asset in that scenario which needs to be acquired by the entity. So those were grants related to income, hence were getting credited to the P&L straight away in scenario 1 and over the 4 years in scenario 2, right? According to the matching principle. Now under scenario 3, because entity is casted with the responsibility of acquiring a particular depreciable asset. So unless and until entity acquires that depreciable asset which is ready for use, grant cannot be credited to the P&L. So grant will be credited to the P&L once this asset is acquired and ready for use, right? Now, there are two options or two accounting choices available in that case. Either I can present this grant net to the asset cost, or I can set it up as a deferred income in my balance sheet. Both the treatments I have discussed in my previous example, right? So accordingly, I will do the accounting. So if I choose to present it as separate deferred income in my statement of financial position, it will be credited to the P&L over the useful life of the depreciable asset. The way depreciable asset gets depreciated year on year, depreciation gets reflected in the P&L. In similar way, grant will be amortized and, it will be credited to my other income, right? Or the other way around, what I can do, I can deduct the grant amount from my cost of depreciable asset, and net cost I will be starting to depreciate in my P&L, right? Any doubts on this question or concept? So, Satpute is asking what will be the treatment for the grants received from multilateral institutions by a PSU. So, see, as such, there is no differentiation in the accounting treatment for the grants received from different organizations or different governments, right? So if the giver of the grant is qualified or meeting the definition of a government, and the grant or the benefit is a transfer of economic resources and meeting the definition of the government grant, in that case, Ind AS 20 becomes applicable and the accounting would be according to that. So if the grant is related to acquisition or purchase of any asset, then it will be a grant related to asset. Hence, we have two choices. Either I can set the grant as deferred income in my balance sheet and amortize it over the useful life of the depreciable asset, or I can deduct the grant on the day one from the cost of the asset and depreciate the asset on a net basis, right? So these are the two options in case the grant is related to asset. And if the grant is related to income and there are no further conditions or actionables, then it will be assumed that it is a free condition free grant, hence will be straight away credited to the P&L on day one in other income. And if there are any certain conditions to be met in future, then basis on that, whatever expenses I would be incurring proportionate to that, I will credit the grant over the same period, right? So Munish is asking, interest to government is payable on final year, then why we are deducting on yearly basis? So interest is payable to the government every year. How come you are doubting it to be paid on maturity only? So 5% interest is payable every year, and after 5 years, bulleted payment of the principal amount, that is 50 lakh, is required to be made, right? So interest is payable every year. Only loan is repayable in one bullet payment after 5 years. So the language of the question is, A Limited received a grant, received from a government a loan of rupees 50 lakh payable after 5 years, right? So at the rate of 5% interest is just a feature of the loan. Loan is payable after 5 years in bulleted payment, right? Okay. Again, another question. Okay, no questions. Shall I proceed? Okay. Now the next is repayment of a government grant. Now it might happen that government has given a grant to you and you were expected to fulfill or comply with the underlying conditions of that grant contract, but 2 years down the line, 3 years down the line, it is realized that you have defaulted on any of those conditions, which triggers the repayment of the government grant, because government said that, boss, we have given this grant to you for this XYZ purpose and you did not fulfill that purpose, so hence you are required to refund whatever the grant we have given to you. So in that case, repayment of government grant is triggered, and accounting for repayment we need to do in our books of accounts, right? So repayment treated as a revision of an accounting estimate, correct? Because this is a revision only. Now, if the grant which we had received originally was related to the asset, that is asset related grant, then what we will do now, recognize by increasing the asset carrying amount. So earlier, if we have deducted the grant from the asset, right, we have chosen the net presentation, right? So now what we will do, we will increase the asset carrying amount when the grant has become repayable. Number one, cumulative additional depreciation that would have been charged or recognized in the P&L till the date in the absence of the grant shall be recognized immediately in the P&L. Now, what we will do, suppose 100 crore was the cost which entity has incurred for the construction of an asset. 50 crore was the grant received from the government as a reimbursement to the cost of the asset. Entity has opted to present the grant net of the cost of the asset. So entity started, depreciating the asset. 100 crore minus 50 crore, that is 50 crore divided by, say, 10 years. SLM useful life 10 years, so 5 years, 5 crore. So 5 crore is the depreciation amount the entity would have been charging, right, by deducting the grant amount from the cost of the asset. So my P&L, which would have been debited by 10 crore, is actually getting debited by 5 crores only because of this grant deduction. Now, After 5 years, we realized that some of the conditions which were required to be complied with, we did not meet them, and we got a notice from the government that we are supposed to repay the government grant. Now, after 5 years, my P&L, if grant was not received, would have reflected the depreciation of how much amount? 10 crores for the 5 years, that is 50 crores, right? But now, because I have deducted the grant and taken the advantage of the grant, so my P&L is actually debited by only 25 crores, 5 crores each year, right? So the balance 25 crore depreciation, which is not yet debited to my P&L because of this grant, will now be debited on this repayment notice, right? On the in the year in which such grant becomes repayable. So this 25 crore additional depreciation that would have been recognized had there been no grant will now be recognized in my P&L on immediate basis. Number one. Number two, check the possible impairment of the new carrying amount of the asset. Because now that 50 crore which I had deducted earlier and presented my PP&D at net of grant will now be added back by the same amount. So in that case, what will happen? I need to compare the revised carrying amount of my property, plant and equipment for any impairment indicators. Because whenever we increase the carrying amount, Ind AS 36, impairment requirements gets triggered. And if there is any impairment loss, then I will recognize that impairment loss as well right away in this year, right? Bringing down the asset carrying amount again, right? Because of impairment loss. Or by reducing the deferred income balance by the repayable amount. So if I had opted set up the grant as a deferred income only instead of presenting it net from the cost of the asset, then in that case, if 5 years down the line grant has become repayable, in that case what I will do, I will reduce that deferred income balance, right? So whatever the accounting choice I had opted, according to that, I will be doing the repayment of grant accounting, right? For the asset related grants. Now, for income related grants, first deduct from unamortized deferred income balance and any excess recognized as an expense immediately. So, for example, if say 15 crore was the grant amount received, right? And this 15 crore was to be amortized over next 5 years, right? So 3 crore each year, right, was to be credited to my other income. Now, after 5 years, or so after 2 years, grant has become repayable because of some XYZ conditions which I did not comply with. So in this case, because there is as such no asset in place, it was an income grant only. So 3 plus 3, 6 crore, right? I have already credited in my P&L in the previous periods. And now out of the 15 crore, suppose only 8 crore government is asking for a refund, for example. Okay, 8 crore. Now, what is my balance? 15 minus 6, 9 crore. So 9 crore is my still unamortized balance sitting in my balance sheet, and 8 crore is the demand made by the government. Then what I will do? I will deduct this 8 crore from 9 crore and I will credit 1 crore this year itself as my income. If suppose the demand instead of 8 crore is say 10 crore, okay, then what I will do? 9 crore is my deferred balance as on date and 10 crore is the demand. So I will set it off first with the 9 crore outstanding deferred balance and 1 crore I will charge to the P&L immediately, right? So if demand is greater than the outstanding balance as on date, then the balance will be charged to the P&L immediately. And if the demand is less than the balance outstanding, then the balance delta amount will be credited to the P&L immediately, right? So this is very simple. We just need to compare the demand amount with the outstanding balance amount. If demand amount is less, no issues. If demand amount is greater, the delta will be charged immediately in the P&L, in the year in which grant becomes repayable. Any questions on this concept, or should I move to the practical questions on this concept? Okay. So this is one of the question given in your study material. A Limited has received a grant of rupees how much? 10 crore. Okay. In the year 2001-2002 from a local government in the form of subsidy for selling goods at a lower price to the lower income group population in a particular area for 2 years. Okay. A Limited had accounted for the grant as income in the year 2001 to, while accounting for the grant in the year 2001-2, A Limited was reasonably assured that all the conditions attached to the grant will be complied with. However, in the year 2005 and 6, it was found that A Limited has not complied with the above conditions, and therefore notice of the refund of the grant has been served to the A Limited. A Limited has contested but lost in court in 2005 and 6, and now grant is fully repayable. The accounting done in the previous year was not incorrect and was not in error as per Ind AS 8. Analyze how A Limited should reflect repayable grant in its financial statements for the year ending 2005 and 2006. So what has happened in 2001-2002? 10 crore was received by the A Limited for, facilitating the lower income group its products at a reduced selling price, right? Or at reduced prices. Now, there were certain conditions attached to the grant which were expected to be fulfilled by A Limited. Hence, A Limited accounted for the grant when it has received. However, later, 3 years, 4 years down the line, it was found that they did not meet certain conditions. Hence, grant has become repayable. They contested in the court but lost. Now the grant is fully repayable in 2005 and 6. So for the year ended 2006, March 2006, what would be the accounting requirement? So that is the question. Question is clear? Okay. Let's see what is the solution. Paragraph 32 of Ind AS 20 states that the government grant that becomes repayable shall be accounted for as change in accounting estimate. See Ind AS 8 accounting policy, change in accounting estimates and errors, right? Repayment of the government grant related to income shall be applied first against any unamortized deferred balance, and if still there is any balance, it will be charged to the P&L, right? To the extent repayment exceeds any such deferred credit, or when no deferred credit exists, the repayment shall be recognized immediately in the profit and loss. So this is the same thing which we have discussed here on this slide and through this example, right? So first we will deduct it from the unamortized deferred income balance, and if there is still excess, then it will be recognized in the P&L immediately. Now, what would be the journal entry? Repayment of government grant account debit to grant payable or repayable. So, expense account will go to the P&L, and this is a liability I am now creating in my balance sheet, right? By how much? Full amount is repayable as per the facts of the question, so 10 crore. Being recognition of repayment of the grant in the statement of profit and loss. Correct? So this is the first entry which gets triggered because of this demand notice. So expense account debit to liability account, basically. So repayment of government grant, expense P&L account debit to grant repayable balance sheet liability account. 10 crore, 10 crore. Next, grant repayable account debit. So whenever you make the payment, grant repayable account debit, that is liability account debit to the bank account, being grant refunded or repaid. So liability account debit to asset account, that is bank account. 10 crore, 10 crore. Right? Assuming that no deferred credit balance exists in the year 2005-6, therefore repayment is recognized in the P&L. Now, as per the facts of the question, what is given in the question? While accounting for the grant in 2001 and 2, A Limited was reasonably assured that all the conditions attached to the grant will be complied with, right? So what entity has done? Entity has recognized the full 10 crore in the year 2001 and 2. Hence, there is no unamortized deferred balance available in 2005 and 6 because full 10 crore was already recognized in the P&L. So now what I am doing, because there is no balance outstanding, so full 10 crore is now being charged to the P&L. Had there been any balance, for example, entity might have been amortizing this 10 crore over the 5 years, then if suppose 2 crore, 3 crore was the balance, then 2 crore would have been settled with that balance and remaining 8 crore would have been charged to the P&L in this case, right? Is the question clear? Any questions, queries, doubts, concerns? Okay. Thanks, Kajjar, for the confirmation. So now there are certain disclosures required by the standard for the government grants. The following matters shall be disclosed. Number one, the accounting policy adopted for the government grants. So if the grant is related to asset, then I will state that I will be accounting for, or the government grants related to the asset are accounted for by way of setting up as deferred income, right? One choice. Or government grants are accounted for, related to asset are accounted for by way of deduction from the cost of the asset, right? So I have to mention what choice I have made for accounting for those government grants which are related to asset. Same is the case for the grants related to income, right? So I will say that grants are recognized as and when they are accrued in the profit and loss account, right? Or another choice is grants are recognized by way of deduction from the corresponding expense incurred by the entity against which the grant is accrued, right? So there are two choices available for the government grants related to asset and two choices available for the government grants related to income. So I have to state it clearly which choice the management has opted for, right? Second, the methods of the presentation adopted in the financial statement, basically the same thing. So if a grant is set up as a deferred income or presented net from the asset, so I will say this in my accounting policies. Third, the nature and the extent of the government grants recognized in the financial statements. So what is the nature of the government grant? For example, government grant of rupees 50 crore has been received against the setup of the mobile manufacturing facility, right? So this is the nature of the government grant. Extent means up to 50 crore or up to 50% of the cost incurred, subject to a maximum cap of rupees 50 crore. So this is the nature. Mobile manufacturing facility needs to be set up. Extent, that is 50% of the cost up to a maximum cap of rupees 50 crore is the government grant. So I need to state all these facts about the government grant which I have received. An indication of other forms of government assistance from which the entity has directly benefited. So these are the disclosures pertaining to the government grants. And now for government assistance, we need to mention that whatever economic benefit the entity has derived. For example, if we have participated in any priority MSME quota, which the government has announced for certain, small size, medium size entities, then we will say in our notes to accounts that during the year, government has announced a priority bidding quota for the MSME entities for, participating in the bidding process for Pune Mumbai Expressway, and we have participated and win an order from the government of rupees 100 crore under that priority quota, right? So that is the government assistance disclosure required. As such, there wouldn't be any accounting triggered, right? Unfulfilled conditions and other contingencies attaching to the government assistance that has been recognized. So during the at the year end, if there were certain conditions which needs to be complied with and they are still unfulfilled, then we will mention all those unfulfilled conditions that are not yet complied by the entity, and other contingencies attaching to the receipt of the government grant, if there are any. Suppose entity believes that there is some contingency involved, that we may not receive the government grant to the fuller amount as we expect, or suppose against 100 crore only claim we will only receive say 80 crore, 70 crore, and what is the contingency involved. So all those disclosures needs to be made in the financial statements. So this is a very small list of disclosures required by this standard as compared to the other standards where the list is very exhaustive, right? So this is one of the sample from the annual financial statements of the Hindustan Unilever Limited for the financial year 2021 and 22 with respect to the government grants. Now what HUL is saying? HUL is saying the company has received approval under the production linked incentive scheme of the government of India for specific product categories. Incentive under this scheme is subject to meeting certain committed investments and defined incremental sales thresholds. Such grants are recognized as other operating revenue when there is a reasonable assurance that the company will comply with all necessary conditions attached to that, right? If we go back to our disclosure requirements, what was required? Method of, nature and extent of the grant, right? So they have explained it explicitly here that nature of the grant is production linked incentive scheme announced by the government, right? How that will be measured? By the incremental sales and by setting up a factory, which they have promised, explained here. Committed investments, right? Committed investments means setting up or acquiring some, long-term assets, right? And when there is a reasonable assurance that the company will comply with the conditions attached to that. Income from such grants is recognized on a systematic basis over the periods to which they relate, right? So here they have presented the line item. Government grants, GST budgetary support and production linked incentives, right? 140 crores, 108 crores in the preceding year, right? So this is how the presentation and disclosure of accounting policy of the government grant will be made. Okay. Any questions? Any questions? Please ping me in the chat box. Okay, let's do this question. ABC Limited has received the following grants from the government of Delhi for its newly started pharmaceutical business. Okay. Number one, 20 lakhs for immediate startup of the business without any conditions. So there are no conditions. Simply 20 lakh is received by the Delhi government, right, for starting up the business. Number two, 50 lakhs received for research and development of drugs. Research and development of drugs. So this is the purpose for which this 50 lakh has been granted. So some research and development of the medicines needs to be done, right, for a particular disease, which disease name is also given, cardiovascular disease, right, with following conditions. The drug should be made available to the public at 20% cheaper from the current market price. So once the research and development happens and, drug is ready for disposal, it should be priced at 20% cheaper as compared to the price of other, companies, right? And drugs should be in accordance with the quality prescribed by WHO, right? So these are the two additional conditions. This is the purpose and this is the amount, right? Third, so this was the second grant. Third grant, 2 acres of land, fair value rupees 10 lakh received for a plant setup. Okay. Fourth grant, rupees 2 lakh received for the purchase of a machinery of rupees 10 lakh. Useful life of the machinery is 5 years. Depreciation on this machinery is to be charged on SLM. Now, how should ABC Limited recognize all these government grants in the books of accounts? So what is your answer on the first grant? 20 lakh received without any condition. Any thoughts? So this is the answer. ABC Limited should recognize the grants in the following manner. Number one, 20 lakhs has been received for an immediate startup of business. This should be recognized in the statement of profit and loss immediately, as there are no conditions attached to the grant. So as such, there is nothing. So full 20 lakhs will be recognized in the P&L on an immediate basis. Right. Mohammed has answered the same. Correct. Second is 50 lakhs, which should be recognized to the P&L on a systematic basis over the periods in which the entity recognizes the corresponding expense for the costs related for which the grants are intended to compensate, provided there is a reasonable assurance that ABC Limited will comply the conditions attached to the grant, right? So 50 lakh was given for the purpose of carrying out some research and development of the drugs. Once that is completed, the drugs should be marketed at 20% cheaper prices as compared to the prevailing market prices, right? And drugs should be in accordance with quality standards set by the World Health Organization, WHO. So if entity thinks or believes that, both these conditions will be met, they are happy to supply the goods at 20% cheaper price, as well as they will be manufacturing the drug in accordance with the prescribed guidelines or quality standards set by the WHO, then entity is free to recognize this 50 lakh rupees in the P&L on a systematic basis. So if entity says that the research and development of the drugs will take, say, 3 years, then over the 3-year period, the entity should recognize 50 lakhs, right? And if entity believes that in year 1, 60% of the research and development cost will be incurred against the total planned cost, then 60% of the grant can be recognized in the year 1 basis on the matching principle. So systematic basis is the word used by the standard. A standard never says that you should recognize the grant on an equal basis or SLM basis. It says systematic basis. That systematic basis can be appropriated or in proportion to the expenses expected to be incurred by the entity over the duration, right, through which that grant is expected to be received. Now, third point is 2 acres of land, fair value 10 lakh received for setup of a plant. Now, in this case, what will happen? Third case, land should be recognized at a fair value of rupees 10 lakhs and the government grants should be presented in the balance sheet by setting up the grant as deferred income, or alternatively deduct the amount of the grant from the cost of the asset. In the given case, land is granted at no cost, so it will be presented in the books at nominal value. So you have two choices again. Either you can present the land at fair value of rupees 10 lakh and then deduct the grant value, which is again the 10 lakhs, right, from the land cost. Or you can present the land at a nominal cost. So whenever the grant is received in kind, so there are two options available. Either I can present or account for the grant received in kind at the fair value of the grant, in this case land at fair value of rupees 10 lakh, or I can present the land at nominal value, say rupees 1, right? So both the options are available. Hence, I can choose which options. Now, fourth case is 2 lakh received for the purchase of machinery of rupees 10 lakh. So now here the condition is to purchase a particular machine, right? So this is a grant related to asset. And how much is the grant? Rupees 2 lakh. How much is the cost of the machine? Sorry, 10 lakhs. 10 lakhs is the cost of the machine. So, and a useful life of the machine is given in 5 years, right? So there are two choices. Either I can deduct the amount of grant from the cost of the machine and depreciate the machine on a net amount for the 5 years useful life, or I can set up the grant as deferred income in my balance sheet and depreciate the asset, that is the machine in this case, over the useful life, that is the 5 years, and credit the grant over the 5 years to my P&L in other income, right? So both the options are available. Whatever entity wants to choose, they are free to do, and accordingly account for it and present, right? Any question or doubts on the accounting treatment of the government grant, be it related to asset or related to income? Yes, no, nothing? Okay. Now let's quickly see what are the differences between the Ind AS 20 and the corresponding accounting standard under IGAP, which is AS 12. Particulars. Government assistance. What Ind AS 20 says? Deals with the government assistance which do not fall within the definition of the government grants, right? Requires disclosures in the financial statements on the nature of government assistance, right? So only disclosure is required by Ind AS 20. Accounting is not required. AS 12 is silent on this aspect, does not deal or define specifically what government assistance means, right? So this is silent. Recognition principle. All government grants should be recognized as income over the periods which bear the cost of meeting the obligation. It specifically prohibits recognition of the grants directly in the shareholders' funds, that is retained earnings or any other equity category or OCI, right? So this is not allowed under Ind AS 20. Now, AS 12 says grants non-depreciable assets without any attached condition shown as capital reserve, which is a part of the shareholders' funds. Right? So, in case grant is received for any non-depreciable asset, for example, to purchase a land, in that case, this is directly credited into the capital reserve under accounting standard 12, right? And will become part of the shareholders funds, because capital reserve is a part of the reserves shareholders funds. If grant is received for non-depreciable asset requires with attached conditions credited to income over the same period, over which the cost of meeting such obligation is charged to the income. So if there are no conditions, then it will be straight away credited to the capital reserve under AS 12. And if there are certain conditions attached, then it will be credited to P&L over the same period over which the cost of meeting such conditions or obligations is charged to the P&L, right? Also gives an alternative to treat such grants as a deduction from the cost of such assets, right? So this is the prescribed accounting treatment under AS 12, which is differentiated from Ind AS 20. Now, promoters' contribution, you might have heard during AS 12, reading grant concept. So under Ind AS 20, no government grants are of the nature of promoters' contribution, requires all types of grants to be recognized as income over the periods which bear the cost of meeting the obligation. That is the matching principle, right? If there is any, and if there is no obligation, no actionable, no conditions, then straight away to the P&L on day one, right? Under AS 12, recognizes that some government grants have the characteristics similar to those of promoters' contribution, requires that such grants should be credited directly to the capital reserve and treated as part of the shareholders fund, right? For example, grants related to non-depreciable asset received from the government without any conditions, like we discussed here, right? So this first case, basically, this will be regarded as a promoter's contribution grant under AS 12. Now, grants in kind, basically non-monetary grants. For example, land given by the government. Non-monetary grants at their fair value or at nominal value. So either I will recognize at fair value and I will measure the fair value in accordance with Ind AS 113, right? Or I have the option to recognize these assets at nominal value, right? Under AS 12, non-monetary assets given at concessional rate should be accounted for on the basis of their acquisition cost. Non-monetary asset free of cost should be recorded at the nominal value. So no fair value concept, right? So if we are paying a minuscule amount, then it should be recorded at that amount, whatever I have incurred in order to obtain that asset, even if received at concessional rate, or if I have not paid as such anything, everything is received free of cost, then I will record at the nominal value only, right? Concessional loans from the government should be recognized and measured as a difference between the initial carrying amount of the loan measured as per Ind AS 109 and the proceeds received. No specific guidance, right? So below market rate of interest loans, forgivable loans, all such, loans are to be treated as a government grant under Ind AS regime, because we are getting the benefit of reduced interest payment on those loans, right? Or non-repayment of those loans to the government, right? But under AS 12, as such, there is no specific guidance. And if there are any below market rate of interest loans received and we are accounting it for under AS 12, then there wouldn't be as such any accounting. That loan will simply be treated as a loan only at the rate of 5% instead of 12%, right? So that would be regarded as a loan only under AS regime. But under Ind AS regime, since there is a benefit of 7%, that needs to be accounted for as a government grant. What are the differences between Ind AS 20 and IFRS standard IAS 20, from which we have adopted this standard or, converged? Non-monetary government grants measurement. So Ind AS 20 earlier was, having a carve out from IAS 20. So fair value and nominal value options both were available under IFRS regime, but under Ind AS regime, initially when the standard has been, uh, converged, this nominal value option was not available. But then Institute of Chartered Accountants of India made a amendment in Ind AS 20, which was effective from 1st of April 2018 only. So this is just for your knowledge. As such, it is not going to impact anything now, because we are now in 2023. So this amendment has no relevance as such now from your point of view, but just for your knowledge, I have just put it up here. So earlier it was only at fair value. Now it is nominal value, right? As well. So either nominal value or at fair value, both the options are available. So now the standard is streamlined with IFRS series, IAS 20 as well. So at current date, this difference does not exist, right? Just FYI only, I have kept it so that you know that earlier when the standard was, adopted, there was a carve out, which has later on been, removed through amendment, made effective from 1st of April 2018. Now, because of same difference, there was a presentation varied. So now again, this is not applicable as on date, right? So as of now, there is no difference at all between Ind AS 20 and IAS 20. So both are streamlined, right? So that was it from my side on this standard. And I'm happy to take some MCQs and your queries thereafter, if there are any. So let's try hands-on first on these MCQs. Now you will be answering in the chat box. Which of these disclosure is not required by Ind AS 20? The accounting policy adopted for the government grants, including the methods of the presentation adopted in the financial statements, unfulfilled conditions and other contingencies attached to the government grant, the names of the government agencies that gave the grants along with the dates of the sanctions of the grants by these government agencies and the dates when the cash was received in case of monetary grants, and the nature and extent of the government grants recognized in the financial statements by and an indication of other forms of government assistance from which entity was directly benefited. So out of this ABCD, which disclosure is not required by Ind AS 20? So Viraj is answering option C. Okay. Munish is also of the same view. Others? Correct. So answer is option C, because this is not the disclosure asked by the standard, right? As per Ind AS 20, accounting for government grants and disclosure of government assistance, a government grant that becomes repayable shall be accounted for as dash. What is the keyword? Any idea? Able to recall the definition of change in accounting estimate, right? That we have studied some time back. So whenever grants become repayable, that is treated as a change in accounting estimate only, right? Which of the following is not specifically excluded from the purview of Ind AS 20? Government participation in the ownership of the entity, government grant covered under Ind AS 41, government assistance provided in the form of tax benefits, and forgivable loan from the government. So what is not covered by Ind AS 20? exclusions. Any luck? You remember we have studied the exclusions at the start of the session. Scope, scope inclusions and scope exclusions. So what is not part of those scope exclusions? That is the question here. So Viraj is saying A, government participation in the ownership of the entity. That you are saying is not. Forgivable loan. Forgivable loan is not part of exclusions. Let's go back to the slides so that you can quickly connect. So accounting for government grants, that reflects the effects of changing prices. This is the first exclusion. Second is in the form of benefits like income tax holidays, tax credits, accelerated depreciation, that is tax benefits. Third is government participation in the ownership. And fourth is government grants covered by Ind AS 41. So these are the four exclusions, right? Now in the MCQ, so first is this one, this is there, and this is there. What is not there in the exclusions? Forgivable loans. And furthermore, even if you do not remember, then at least, we have just studied that forgivable loan is a government grant. Then if forgivable loan is a government grant, then how that can be excluded from the scope of the standard, right? Now, Viraj, Munish, are you agreeing with this? Is it clear now? Okay, next. Grants related to income are government grants other than those related to dash. So there are two categories of the government grants. One is the government grants related to asset. Another is the government grants related to income. So here the definition of the government grant related to income is the grants related to income are the government grants that are other than those related to the assets, right? So this is the definition given by the standard. For the purpose of Ind AS 20, accounting for government grants and disclosure of the government assistance includes the provision of infrastructure in development areas or the imposition of trading constraints on competitors. Sorry. So this statement is true or false? This statement is false. Next, are the following statements within the scope of true false in according to the Ind AS 20 in relation to the benefits mentioned therein? Number one, the provision of the infrastructure in developing areas. Number two, the imposition of the trading constraints on the competitors. So there are multiple options that both the statements are false. First is false, second is true, first is true, second is false, and both are true. Now, which option do you think is the correct one? A, B, C, or D? Any luck? So both the statement are false, right? Why? Because the provision of general infrastructure development is not a government grant or government assistance. So is the case for imposition of trading constants on the competitors. Both the matters we have, discussed previously, right? So both the statement are incorrect because both are not government grants. So that was it on the standard. If you have any questions, doubts, whatever we have discussed, I'm happy to take your queries. Any questions? So Munish is saying second is government assistance. Second is government assistance, you are saying, right? Trading of constraints on competitors. How come? We have discussed this specifically while we have studied the definition of government assistance. Let me go back to the definition. Government assistance for the purpose of this standard does not include benefits provided only indirectly. For example, imposition of trading constants on competitors, right? This is very well given in the standard itself, right? Are you agreeing, Munish, now? Okay. Thank you, Gajar and Saravanan, for your kind words. In the last MCQ, we were asked for grants and assistance. Okay, let me go back to the last MCQ again. Right? This is the MCQ which you are referring to. Let's read again. Are the following statements within the scope according to Ind AS 20? So within the scope means what? Either it should be a government grant or it should be a government assistance. Neither of these two is a government grant nor a government assistance, so they are not in the scope. Correct. Assistance has to be direct. It shouldn't be a general benefit which is being given by the government to society at large by developing some infrastructure in the country, for example, construction of highways, roadways, airports, ship ports. So that cannot be said that this is the assistance given by the government to any entity, right? So this is the general duty of the government to do the development in the country, right? Clear? Okay. Any other question anybody wants to ask? Not able to see such any questions in the chat box. Not sure if you are typing. I can wait. Okay, that's clarified. Thanks, Manish. I'm just waiting for next 1 minute or so in case somebody is typing the query in the chat box so that I leave no query unanswered. Viraj is asking, sir, MCQ while reading, not word skipped. Sir, sometimes it gets speedy. How to improve? Okay. See, it happens, whenever we read the MCQs and we sometimes miss on the critical aspect of the question and end up answering a wrong option. And this happens with everybody, right? It happens with everybody. So this is, you are not the exception. It happens with me even now. Sometimes the tricky MCQs are there, and we do not interpret the question correctly, and end up giving a wrong option as an answer, right? So for that, some practice is required on the concepts of the standard. So if you understand the concepts well, and the definitions, key terms or keywords within that definition, which we should understand, interpret, and remember, and then carefully read the MCQ twice before picking up any answer. There is no hurry to answer MCQs, and these are very scoring for the examination purpose, right? So if you ensure that all the MCQs are correct, then at least you would be scoring good marks in your examination. So the key technique is good understanding of the underlying concepts plus careful reading of the MCQs in the examination. Hope I answered you, Viraj. Right? Okay. So thanks for listening me patiently today. I hope the session was informative and a value add to you. I wish all of you very best for your, upcoming examinations, and wish you score very good marks in the financial, reporting paper, or for that matter, in all your papers. So thank you guys. I'm logging off. Sorry. Yes, yes, session is over.